Sales to an employee ownership trust can often be achieved completely capital gains tax free. So business owners can potentially sell their business, whether it's 2 million, whether it's worth 2 million, 10 million, 100 million, subject to certain conditions being met, to an employee ownership trust, completely capital gains tax free. And this has become even more attractive since the recent budget on the 30th of October 2024, where capital gains tax rates were raised from 10% to 18% and 18% to 20% to 24% for capital gains tax purposes. This is something that we assist many clients with, and I believe we'll be getting more and more involved in these type of projects. In this video, what I actually want to do is outline the 4 changes to the legislation. It's still at its draft phase, but 4 changes that will come into play from the 30th of October 2024 in relation to employee ownership trusts. Before we go on, don't forget to like, comment, share and subscribe to our channel. We are Chartered Tax Advisors and my name is Omar Aswat. So the changes are specific for the conditions relating to capital gains tax relief. So paying no capital gains tax on the disposal of shares. So they effectively, in a nutshell, before we go on to the 4 different points, the rules will become tighter. So the first change is around the fact that the business owners will have less control, or the rulings or the conditions will ensure that business owners will have less control following the sale of shares to the employee ownership trust. The second is the fact that the trustees should be UK resident trustees. Previously, there's been some sort of planning, you could say, that's been undertaken whereby trustees have been non-UK resident, and then therefore the disposal of shares in a UK company by non-resident trustees can potentially give rise to no capital gains tax again. So effectively, you're utilizing relief on both stages. Just keep in mind that the sale of shares to an EOT is a relief and it's not an exemption. Okay, it's a deferral. You could say it's a deferral type of relief. The third change effectively increases the time period whereby capital gains tax relief can be withdrawn to 4 years. And the final change is around the market value. So this is one instance where the sellers really benefit. Okay, usually in tax, you'll have a positive on one side and then you'll have a negative somewhere else, whether it's tax or commercial negative or real life negative. But here it's like a double win, whereby sellers can sell to the EOT for market value proceeds. Now again, previously, let's not talk about previously. What the rules say now is that reasonable steps must be taken to ensure that the sale to an EOT is at a justifiable market value figure. So effectively, you can't be utilizing inflated valuations to then earn a higher payout. Those are 4 changes to the employee ownership trust legislation. If you'd like to discuss EOTs with us, we assist our clients on HMRC clearance, the initial advisory as well, for your employees to understand the circumstances, how things work going forward, along with the legal aspects. Please reach out. You can also visit our website, www.aswatax.co.uk. My email is omar@aswatax.co.uk. Visit our Google reviews, and I shall speak to you soon. Hope that video was beneficial. Thank you. Bye.